Hi traders, and welcome to the technical analysis market wrap on Friday the 24th of June. So we're fast approaching the end of the halfway point of the year actually, and we're certainly seeing a little bit more stability in the market this week. We've got a lot more consolidation, which I think is important for the levels that we're at. So we'll jump straight into the markets and have a look at what we can see for today and early into next week. Let's jump into the Aussie USD first. And look, you can see that we've seen a bit of a mixed week, really. Like, this is a daily chart. You can see we've had some ups and downs, but we've kind of landed, similar to where we were last week, kind of in the middle here of just underneath the 70 zone. Now, it's a pretty important zone, but you've got to go to a smaller time frame to really isolate any moves here. So we've got, let's go down to the 4 hour first of all, and you can see that. Look, although we've had a little bit of price movement, it's been a little bit difficult to trade because really the ranges haven't been big enough. And, I'm big on ranges. If you haven't got enough room to actually, get a trade in with a decent stop loss and a decent take profit, it makes it very difficult to trade. But on a 4 hour chart, though, we can see here that we're approaching the top of the 20 moving average. I've got the 70 marker. Let me get rid of a few of these lines and we'll concentrate only on the main ones because I think the other ones we really want to be focusing on. We've got one here at 69.20, which is an important zone. You can see that's very clear. And we also got the 70 cent flat mark. So we know that's a fairly important zone as well, just simply because it's a round number and we have gravitated to this level quite a bit. So yeah, that being said, we find ourselves closer to the top end of the range. When we're looking at longs, the only problem that we've got in front of us, we've got several problems, of course. We've got a 20 moving average right now faced on the 4 hour, and we've also got the 70 cent mark not far away, which is also the 50 moving average by the time it gets there on the 4 hour chart. Now, when we go to a daily, what does that even mean? There's no moving averages that are even close. So although the moving averages are there on the 4 hour, we know that the longer prevailing moving averages that could cause us problems are still a little bit away, all right? So we know we've got the 20 moving average here is about 50 pips higher than that. So what that tells me is that if we do get a break above the 20 moving average on the 4 hour, although there is a little bit of noise in front of us, we still have enough room to probably push up. Now, on the 1 hour, this is probably the one that you're going to trade on because we're relatively range bound now. There's no question about that. So what we're going to be looking for here is, again, you can see the moving averages starting to coil on the 1 hour, which is telling us that we're basically going sideways, right? So that's what moving averages are telling us here. And yeah, we know that the upside resistance, although it's there, is not crazy. So if we, in my mind, we want to probably get above the 70 cent mark to actually take the long. If we go above 70 cents and we look for a long opportunity, I think we've got a pretty easy time to about the 70.50 to 70.60 mark, which is also a pretty important zone because it's a 20 moving average on the daily, and we know that historically can give it a little bit of trouble. So that is probably the area that I'd be looking at. So it's again a scalp. We're looking at a break. Probably a 1 hour close above 70 cents would get me looking long to the 70.50 for a scalping opportunity. Okay, so I don't think it's a too bad scalp. If you are looking for the short, and there is every opportunity that it can do that too, we're looking for a close below the 69.50 here, this area here. We get a close below there, and it's really a very small scalp down to around the 69.20 mark. So it's a 20 or 30 pip scalp as well. It can do both, and I'm not really fussed either way because at the moment I'm not looking at anything that's telling me it's going to go long or short. I'm just seeing sideways movement, so I haven't really got a bias either way. Both of them would be very acceptable trades, but they do have to close below those key points. If we get that, then I think we can take both trades, but they are absolutely a scalp. We're going for about 30 or 40 pips there, so nothing to write home about, but certainly good enough to take both areas without any reservations. Okay, so that is the Aussie K, and that basically stands in between these two green lines. So that's what we're trading towards there, and we get a break either side, and we're happy with that one. We'll move on now to the US dollar CAD, and this one, look, this is a pretty, this is telling a story that's probably a little bit better, really. Obviously, we hit the peaks up here. We knew that that was very strong resistance. It did it again this week, so we're pretty happy with that. But of course, it's starting to weaken off that, which it technically does nearly automatically when it gets up there on a big prolonged move. You can see these moves are very, very big. Like, you're talking about, 550 pips, really. Like, that's a really big move in the space of a couple of weeks, obviously. Now, I know we've had some turmoil, and I know we've seen quite a bit of action on the world stage that makes it do that. But still, it's still relatively technical on a small time frame, right? Like, I mean, when we go to a 1 hour, probably 1 hour is probably going to really highlight the resistance from there. You can see once it did hit the peak, it's basically falling ever since, and you can see that we're about to get a 20 moving average and 50 moving average cross on the 1 hour chart. Now look, what you've got to be careful here that you don't say, all right, this is going to cross, so we're going all the way back to the lows. That's not necessarily the case, because I mean, it's still looking pretty strong even on a daily chart. But what we do know is it's hit a very important level of resistance, and that's the key. Understanding that you're at very, very heavy resistance. It doesn't mean that it's not going to go longer, but in my mind, it needs to break above that level on a daily chart, on a significant chart like a daily close. Then that gets us a lot more interested in that particular type of trade. So until then, we trade the weakness, and we trade it probably only for small zones. We're really scalping here because we don't really know how much gas there is in the short. So we're going to be very, very careful. So realistically, we've already got a series of lower highs and lower lows, albeit fairly shallow, but we are trading under the 2 moving averages now. So you could easily see this sort of weaken off throughout the day and potentially push down to the high 128, which is around the 80 to 90 pip zone. This level here is a pretty important zone. You got a roll reversal, you got resistance there, and you got support there, and you're going to have a 200 on the 1 hour, which on a bigger time frame is going to be a significant moving average. It's going to be probably the 20 moving average on the daily. So realistically, it's not a bad trade, and you're going to see that little bit of weakness kick in. You got a lot of these highs here. You can see a lot of the highs that touched and basically sold right off. You can see them right through there. Okay, so we know that this level is an important one, and it's about 80 pips away. All right, so by the time the 20 gets there, that could be a pretty reasonable trade to re-pick up the CAD. Not a bad trade at all. So that's what I'm looking for there. But of course, a close above the 138, well, probably 130.80 level. All right, we need a daily close above that level, and that would look at the continuation of the long. Ideally, in my perfect world, I would be more cautious on that one. I'd let it go and do its thing, and then come back and retest the top from above, the classic lightning bolt. That roll reversal is far more important in my mind. So if it does that, I'd be a fair bit happier. So I wouldn't take the initial break, but if you really, really want to, still technically it's sound. But both ways on this one, okay? Close above there, and we're going long, and basically a continuation of the short. With a lightning bolt on the way down on the 1 hour, and we start targeting this level here, which is around the 128.80 to 70 area. Pretty good trading on the CAD. All right, US dollar yen. So this one has, look, we've seen a bit of a mixed bag, really. It tried to sell off down to the 20, absolute classic pullback off the 20 moving average. Talk about it every week. That's because it happens every week somewhere. And if you only traded that, of course, you can have a lot of fun. So it's really, really important to focus on these key levels. You can see that it's had the big pickup. Look, it finds itself, this is a very, very dubious trade now. We know there's a lot of conjecture around what the central bank in Japan is doing. We could see a really important announcement come out of Japan in terms of what they're doing with their currency. That could literally send this hundreds and hundreds of pips either way in seconds. So you really want to be very, very careful trading this one. In my mind, this is probably a no-go zone. Even though we're covering it, I would probably treat it as a bit of a no-go zone until we get some stability in and an understanding of what they're actually going to do there. Okay, so it's very, very important that anyone who saw the Swissy break that level many years ago now can see what it can really do. It can fall hundreds of pips very, very quickly, like in seconds. It'll take out all stop losses. It'll just be a very, very difficult trade. So I would probably steer clear of this one until we get a little bit more stability. Okay, so just be very, very mindful that there's very, very important things that completely override technical analysis happening on the yen at the moment. All right, over to the dollar index. Look, a bit of a mixed bag as well, this one. We can see that, we've seen some consolidation happen here, really. I know it looks like it's had a big range, but it hasn't really. And it's given you opportunities to actually scalp on the euro, but that's about it. We haven't got a breakout direction yet. So it's really one of those things where we're just sort of sitting and watching. It's penanting up a little bit here on the dollar index, but we'll go to the euro because it's obviously the tradable one. Look, it's found its feet at the bottom here. It's trapped inside the zone between the 104.80, which we know is very important, and also the 20 moving average, okay, which is around that sort of 105.70 area at the moment. Look, we're sitting here in the middle of that zone, really. So we've got about 30 or 40 pips either way. And I think it's a reasonable zone either way as well. So look, let me put a line there, and then we'll go to the smaller time frame, and basically we can pinpoint what we're going to do. You can see here that we're right in the middle of these two zones, very, very important zones on the daily. And this is why we always start out at the daily and work our way back. So when we go to a 1 hour chart, you can see that the two ranges that we're operating in between are right through there. Okay, so basically we've got a handful of pips either side. A break above here is a very cheeky scalp up to the 105 sort of 70 area, and a break down below these moving averages and a cheeky scalp down to the 104.80. Not a big range, but until this one does something proper, and when I say proper, a daily close above a serious level, we're not really going to take it too seriously in terms of long-term trends, right? What we want to do is isolate the scalp, and that's the most important trading part of this euro at the moment. So I think it's got it there. I think both of them are reasonable trades. It's in the middle of nowhere at the moment, so I would take either with the same amount of confidence, and it will probably drag to those levels like a magnet anyway. So if you're looking for a scalp and you're around when it happens, great, or set an alert, and if you get that and you happen to be around and you see the breaks of these levels and there's still enough meat to actually get to those levels, then I think you could give yourself an each-way chance of basically getting a good scalp in both directions. This is one where we've got no bias at all. A daily close above this level, a daily close above 106, different story again. Then we're aiming for the higher 106 and 108 levels, and a break, of course, down below the 104.80, and then we're starting to target those really deep lows again at around the 103.80. Okay, so pretty easy trading on the euro, really. Trade this zone first, and then trade the bigger zones when we get a daily break around it. All right, the last one we'll have a look at is the S&P 500. This one is starting to show a little bit more strength now, and I know we've been talking about it a little bit. Last week it was looking all doom and gloom, but we've seen a bit of a pickup. We saw the reversal candle there, the indecision candle at a very, very important key zone, and we've seen a little bit of strength kick in now. Look, it's still, technically still in the downtrend, no question, but we're probably going to look at scalping opportunities to the long side on this one. We know we've got a target on the bottom. It's fairly straightforward now. It's 36.30 area is the low. If that low breaks with a daily candle, then we're really looking at going down to 3,500. There's just it'll go like a magnet to the 3,500 if we get a daily close below this level, but we're not going to trade that until it obviously happens. The next real logical zone is around this level here, which is around the 38.50. The 38.50 is a support zone through this area here, and also you'll find the 20 moving average will catch it up by that point, and it'll be basically a resistance point as well. So it's 130 points away, and you go to the smaller time frames and you can get yourself in a trade like this. You can see we've been going very sideways for the last few sessions, but if we get a break above this level here, especially over the 3,800, then we're starting to look at an easy 50 points, really. Like it's going to gravitate to that level. In my mind, though, I would probably wait a little bit longer. If you want to scalp it, if we get a series of higher highs and higher lows of significance, probably a close, at the very, very least, a close above 37.50, and then you can start targeting the long opportunities from there. Okay, so that's what I'm looking for there on that one's scalping opportunity up to the 20 moving average. But if it starts to turn around and it breaks down lower, then there's lower opportunities as well. My preference on this trade is to the long. It makes more sense from a technical standpoint to go long back up to the 38.50. So that's probably the best trade, the best quality trade anyway. But I would take either, because if it turns around here and starts to do lower highs and lower lows on the 1 hour, I would be looking at scalping down to the bottom levels as well. So not bad trading on the S&P 500. So I think this week we've had some pretty good scalping opportunities. It's been fairly solid from a technical standpoint, but now, again, we're waiting for those key breaks, but I think we've got zones to trade in between. So we've got two levels of trading here. We've got the breaks of the key levels, which are going to give us more of a swing trade next week. But up until then, we can scalp the zones. Nearly every one of these trades we looked at today have got scalping zones that you can get involved in on a smaller time frame. So I think it gives us a bit of a mixed bag of what we need, and hopefully there is something for somebody and you're able to capture some pips this week. Have a great weekend, everyone. I look forward to seeing you all next week.